Media's Mining Weekly Online is speaking to Kobus Loots, the CEO of Pan African. Kobus, you've had some good results now, and you're also looking at some growth projects. We know that you have gone heavily into tailings retreatment, and now 40% of your gold is coming out of tailings. Do you have a growth potential within tailings that's sustainable over a long period of time?
Martin, yes. I mean, we're very proud of what we've achieved at Elikhulu. It's performing actually a little bit better than what we had anticipated. So that's great. And we don't have to grow in order to realize value for shareholders. So if we simply run our own portfolio in a reasonably good manner, then I think that you'll see this value to shareholders come through. That being said, we continue to look at opportunities. We're silly not to. And as I've said, every time we look at opportunities, we learn a little bit more about our own assets also.
Yes, and you're also not averse to going underground, and we heard about Egoli now. We know that you have closed some sections of your underground that haven't really performed very well, but it seems like there is enthusiasm around what you call Egoli. What sort of investment will be required, and what sort of return do you expect?
Well, Martin, as I said before, if this project was anywhere else in the world, it probably would have been listed by itself and have a decent market cap, especially if a company had the ability to deliver and actually produce and bring the project on stream. So I don't think anywhere else can you get circa 100,000 ounces of production for about $40 million of capital. So clearly we've been quite circumspect about Egoli at the moment. We've done very positive studies, and we're awaiting a further optimized study by the end of September. Then we'll start discussing the project with shareholders and with others. We do not have license, in my view, to go and do a big new underground project at this point. We're going to have to do a bit more homework.
I remember Harmony used to talk about this, and Graham Briggs used to talk about it. Is this what they refer to as Harmony 10, or what?
Yeah, the 2010. So Harmony said we'd be mining there in 2010, which is why we had to change the name, clearly. And we've done a lot of geological work to support the reserve and the resource. Being quite skeptical, we even went so far 2 years ago to drill another surface hole into Egoli. So more than 2 kilometers that we drilled. We intersected the reef at just over 2 kilometers. 5 deflections also intersected the reef. So the ore body is there.
And at Barberton, what can we expect coming out of there? It's an old historic area, but you still seem to have a lot of faith in it.
Yes, that's a flagship asset of ours, Martin. So BTRP, great performance in the year past. Underground, not bad, but a lot of work we need to do. And I think we highlighted in the presentation some of these initiatives. So we have increased rates of development. We're doing more drilling in terms of getting comfort to what we're mining. We have the sub-vertical shaft that we're constructing at Fairview. So all of these initiatives over time should see dividends.
And you seem to have a great commitment to ESG, as they call it. It's 3 letters that are popping up every time I do any interview these days. So environmental, social, and proper governance on the environmental side, and also on the energy side, as we're seeing. We need to do something in South Africa because we've got problems with the supply from the centre. You did mention the word solar. Where are you thinking of doing that?
So, Martin, we're busy completing a feasibility study into a 10 MVA solar plant at Elikhulu. So if there's one site we think that certainly makes sense for solar, it would be Elikhulu. It doesn't use that much electricity, so we can pretty much support all of it via this plant. So let's wait for the results of the feasibility and we'll take it from there.
And 10 megawatt, that's what the government allows now. I mean, that's what you're allowed to do. If it was bigger than that, you'd probably have some red tape to cut through.
Exactly. So, I mean, there's reasons for us speccing the plant at 10, and let's wait and see what the study says.
And is there anything else that you're looking at that will involve self-generation of power?
Martin, that's pretty much it at this point. We obviously are constantly looking at ways of optimizing our use, so that'll continue. But let's sort of first have a look at this 10 MVA plant at Elikhulu.
And swinging back to tailings, are there mountains of tailings somewhere that we know nothing about? I mean, is this going to go on for a long time? Or are you eyeing things around that you can turn to positive account?
Well, we have 13 years of life at Elikhulu at this point, so that's quite attractive. Unfortunately, there are mountains of tailings, but most of them have been retreated. So there's not that many opportunities. There are some.
And just swinging now to your priority, what is going to be your number one priority going forward into the new financial year? You're already in it.
Sure, Martin, we have to deliver the ounces and deliver them safely at the right cost. That's the focus.
And you seem to have safety much better in hand than there have been issues in the past.
Well, look, we've always had a good safety record as Pan-African. What's now made a massive difference is the fact that so many of our ounces come from tailings, which are inherently safer. We also have great safety initiatives, great safety programs. As I've said, our head of health and safety was here today. He's a guy that is solely focused on making sure that our guys and employees do what they need to do.
And just talk about that cost of the surface. It's quite mouth-watering cost there, and not labor intensive at all. Can you give us a few figures on that?
No, well, I mean, so as you've said, 40% of our gold pretty much comes from surface. We only employ 500 people to produce those ounces. So it's a lot easier.
And the cost per ounce?
Well, below $600 an ounce, very attractive.
And then a negative thing, the numbers around the illegal mining startled me. So your security issues must be quite intense.
They are. As I've said, we've professionalized security and we've had to spend a lot more on security in the year past. So certainly it's an area of priority for us. It's not unique to Pan-African. The whole of South Africa is like that at the moment, you know.
And that was Creamer Media's Mining Weekly Online, speaking to Kobus Lutz, the CEO of Pan-African.